Well, hello friends. Hey, it's Jamie here with Reece Homes. I hope you are enjoying a great start to the year. It's amazing to me that it's already February 1st. And let's jump right into it. I want to update you on what we're finding to be a very fast-paced market this year, especially over the last 3 weeks of January. We'll talk a little bit about why that is, and then we'll also talk about upcoming events where we can get together with you, celebrate the year, answer your questions, and see what comes next. All right, so let's talk about 3 indications of why this year has been so fast-paced. The first one is we're down about 50% in terms of new listings. While there are more signs hanging out there, there are, certainly more sellers who are in the market right now, but many of those are older listings that haven't really readjusted to the current market. That said, in terms of new listings, we've only had about 50% of what we would normally see of last year. Now, in listing status, of those listings that were brought on after the first of the year, 47% of them are already pending. So that is a good ratio, especially for what we are being told is a slower market. Now, the thing that we are paying most attention to and we're feeling out there when we're working with buyers in the field is that many of those listings are going very quickly, and a surprising number of them are actually competing and going through multiple offers, much like we saw at the beginning of last year and the years prior to that. Right now, more than 60% of all pending sales have went pending in less than 7 days, and almost 50% of them went pending in 5 days or less. So that's a very active market. Now, why is this? The first one is just low inventory overall. We're down to a level of inventory that actually is lower than some of the levels that we saw at the height of the 21-22 market. Additionally, this is driven by lower stable mortgage rates. One of the things we saw is inflation peaked back in August of last year and has been dropping well since then, and mortgage rates peaked in September, early October last year at about 7.5% locally and have dropped down to about 6.25% locally. And I think finally buyers are understanding that rates are not likely to go down to 3 or 4% anytime in the near future. Most likely we're going to see these 6%, maybe high 5% rates for much of the year. So if you need to or want to either move into your first home or move into a bigger home, a smaller home, whatever you need, now is the time to do it, because things aren't likely going to get much better when it comes to mortgage rates in the near future. And additionally, we're starting to see people have more economic confidence. Now, I know that there have been some layoffs locally and nationally, but relative to the hiring that's been happening over the last few years, those layoffs are relatively small. And each week we're seeing a bit more confidence in the overall economy, with people saying, hey, we're not expecting as big of a recession and I've been seeing this over the last couple of weeks, if any recession at all. So I think that's really driving buyers back into the market and saying, hey, let me go ahead and push forward the plans that I had put on hold, sometime between May and October of last year. Now, one of the things that we do on a regular basis is have events where you can interact with us, and the next event that we have coming up is Sips and Tips, and we're going to be talking about understanding mortgages. Certainly the mortgage environment has changed significantly over the last year, and there are some tools that we have not seen, such as rate buy-downs and some new tools. We haven't seen rate buy-downs in a long time, but we're using those again now. And then we also have some new tools with mortgage companies coming out with some free refinance programs or discounted future refinance programs. So we're going to have Jill Bartoletti with Movement Mortgage, who's going to come in and talk to us about the mortgage environment, predictions for the future, and then also talk to you about the best mortgage tools that you can use, whether you're a first-time home buyer, whether you're looking to move up or move down, downsize, something like that, and even answer your questions about investments if that's something that you're thinking about doing. That's going to be at the Edmonds Waterfront Center. We got a beautiful room there where we'll be able to look over the water and have a great time. And then, of course, we have Early Pie Day. We're going to be looking at having our Pie Day on Sunday, March 11th. We're going to host it again at Cafe Yadro in Edmonds, and we hope that you can make it there. Please be looking out for your invite and for the opportunity to RSVP so we can reserve you an apple pie for Pie Day. Thanks for watching. If you are interested in having a conversation with us, we are absolutely encouraging you to contact us about any real estate related plans you might have in the first quarter of the year or throughout the rest of the year. Whether that's moving up or downsizing, whether that's buying your first home or your first investment home or continuing your investment portfolio. We're also here to talk with you about taxes. I know many of you have received your W-2s and your 1099s and other statements there. If you've got questions about home ownership and taxes, we're here for you. And also, I know a lot of folks are planning, if they're not planning on moving or buying a home, they're probably planning on taking care of, maintaining, or improving the current home that they have. So if you'd like to know more about how to make the best of those improvements, feel free to reach out to us as well. And of course, we're always here to help your friends, family, and colleagues. So if you know anyone who you think we can help, we would love to hear from you and help them while growing our business as well. We always appreciate your support, and we hope to see you at an upcoming Sips and Tips, or we hope to hear from you with your questions. Thanks for watching, and enjoy a wonderful February.